earlier today, which was like fascinating to see all of the startups working in a co-working space, and I've heard really incredible things about collabs as well. Not sure what everyone's respective backgrounds are, whether you work at collabs or work for startups or work for corporates and have ambitions to go into startups, but I would love to, at base, explain a little bit more about my own kind of personal journey and professional interest in Pakistan, if that's helpful. I didn't prepare any remarks, but I think the best thing I could do is just talk from a narrative perspective about what I see in this ecosystem, if that's helpful. Does that sound good?
Yeah. Sounds great.
Okay. So where do we start? So I'll talk about Antler for a moment, and then I'll rewind. So Antler is one of the most active pre-seed investors in the world. We operate in 17 cities globally, started in Singapore in 2017. It's grown fast to have invested in 370 startups in 17 cities across 12 funds. Each fund is local, right? And invests in human potential, human capital, to really catalyze businesses at state of inception. What I do is I run our later stage fund, so that's Series Seed through C. That could be a $500K US dollar check, 500,000, all the way up to $10 to $15 million investment in kind of a Series A and B. We specialize in embedding ourselves into ecosystems through that pre-seed program, but also through the later stage investment program as well. My history, though, I think stems back, just a quick background. I started my career in technology investment banking, doing IPOs and financings in Silicon Valley for Goldman, and then I moved to SoftBank, where I'd helped establish an office in Silicon Valley for them in 2013 or so. But the most influential part of, I think, my career, and perhaps why I'm here today, is because in 2014, we started doing investing in Indonesia. And it was a fund, half Alibaba money, half SoftBank money. This is well before the Vision Fund started. That's the $100 billion fund that SoftBank now runs. But we had started to do early stage investing. And when I first arrived, there were probably, if you added up all of the valuations of all of the companies in Indonesia, it was probably less than $1 billion. And it's strangely reminiscent of what you're seeing in Pakistan today. There's an incredible amount of potential, a huge population, a consumer-oriented economy, no shortage of markets to go after, problems to solve. We can go into which ones I find appealing, but and all it took was, for me, I started writing about these startups and thinking a little bit more about how do you invest in these companies and see them grow. And it was in the last 7 years, that $1 billion in aggregate technology market caps has grown to probably $1 trillion. And you have companies like Grab and Gojek and Sea. I made an investment in 2014 into a company called Tokopedia, which was a marketplace in Indonesia. And that was, at the time, it was a $100 million investment. At the time, it lit up the room to show that there were not just one or two companies that had unicorn potential, but dozens and dozens of them. And the alumni of that company went to go start other businesses as well in this, what they call like dandelion effect, where you get each of the seeds of the dandelion spraying out and starting things. It's in Silicon Valley, it's the PayPal mafia. In Southeast Asia, you have Grab and Tokopedia and others. And I think that effect is starting to take root here as well. And why now, right? I mean, so when I arrived in Indonesia in 2013, it was, smartphone penetration was probably 30%. When I left in 2017, smartphone penetration was probably 65, 70%. Here today in Pakistan, what is it? 40, 45%, right? And so I'm thrilled, I think, because those same sorts of ingredients I see in Pakistan, and my intro to it was, y'all may be familiar with SoftBank's history with WeWork. I was in the basement of WeWork headquarters about 2 years ago, working on some restructurings after the collapse of WeWork, right? And I got a call from a friend of mine at First Round Capital. He said, "Hey Teddy, you did investing in Indonesia. Would you want to look at some companies in Pakistan?" And I said, "Okay, yeah." So we introduced to Airlift and Bazaar right when they were getting started, I guess. And I was like, "Wow, the more I studied, the more I said, wow, this is really an amazing time." And it's rare that one gets to see the same movie over and do it differently. And so, flash forward, through Antler, we've made one investment. Personally, I made a couple, but I see just like an open chessboard of opportunities in various sectors here. The ingredients are similar, as I said. There are also reasons to believe that Pakistan has a huge advantage. It's historically very highly educated, a history of engineering talent, a government that, from as far as I could tell, is hugely supportive of the technology ecosystem and sees it, frankly, as almost like a political priority, if not necessity, to build a knowledge economy here. And I think is this notion of arbitrage, where, okay, in Indonesia in 2013, you could look at the Chinese models, you could look at China a bit. When China went online in 2007, you could look at the US, maybe Japan a little bit. But for Pakistan, the world is full of innovative business models, whether it's social commerce, 15-minute delivery, buy now, pay later, neobanks, supply chain, digitizing supply chain, digitizing the Kirana stores. There is a laundry list of potential business models to choose from, and the only thing holding it back, you have these business models, you have talent, and the next ingredient is capital, right? And here's a crazy stat I'd heard today. That Airlift round, that represented 6% of the entire foreign direct investment last year. 6%, it's huge. And that's not a big round. Like, relative to the size of the digital opportunity in Pakistan, like, that's not a very large sum of money.
How much was it?
It's 85. But like, the world is awash in capital. It surprises me that right now, that even I think it was so far in the past 12 months, there's been about 600 million in funding, which is, by the way, more than the entire history of the Pakistan tech ecosystem. It's remarkable, I think, that number is just so small to me. That's going to change faster than everyone thinks. Because the same effect happened in Indonesia. It was like, it was actually Tokopedia was the first, 50 million plus investment. Now there's like a $50 million investment that happens every day in that country. So I think there's a lot of favorable, even more favorable effects that you might see here, right? That things may even happen even faster. So anyway, it's my first trip. Frankly, it's my first real full day here. But I feel like, honestly, I feel like there's a lot of things that are similar to what I saw then. And so I was so excited about that Tokopedia investment that I ended up moving there, starting an office for SoftBank there, and living there for a year, helping grow portfolio companies. And so there's going to be there's a lot of local investors, and I think more and more than before, investors that come here and set up offices and set up permanent residences, because at least I'm a believer that it's not about the initial investment, it's also about the follow through, right? And like the everyday connecting, entrepreneurs who are so focused on their business with, customers and outside ideas. And it really does take a community, kind of like the community that I guess is, that you're building here. That's a little bit about, my history through this period. The Indonesia period was like 2013 to 2016. And honestly, for the last 4 years, I was really focused on more like AI, semiconductors, cybersecurity, cleaning up WeWork, and some satellite stuff and broadband connectivity. So that was the latest. But frankly, all this stuff's related too. I love this notion. I mean, whether it's the semiconductor production, in the country, to electric bikes, to providing cybersecurity solutions to the enterprises, to battery technologies that I said they're being worked on in the country. There's all these sort of paths towards this knowledge economy I'm talking about are somewhat related and benefit from the same sort of capital, government support, and talent ecosystems that I think are being developed here right now. So I don't know, lucky you. Right? So anyway, maybe we open up to some questions that can spark some further ideas on, things we can talk about, whether that's Antler's roles, potential role, or certain investments we've made, or things like that.
Would your company be looking to invest in Pakistan?
Yeah, we already have.
Oh, you already have?
Yeah.
Which company? You don't have to share.
I'll share. We invested in a company called Davai.
Sorry? That's medicine. And
Medicine.
how much did you invest?
That was $500,000, trying to do more.
And did it go well? Was that pre-seed?
No, it's recently.
But was that their pre-seed round?
It was an A round.
An A round, so that's after a seed round.
Yeah. These names don't mean a whole lot. This was like post product market fit, I guess. We would do pre-seed, which to me is like team presentation. Maybe you're working on your product. We would do seed, which for me is you're achieving product market fit. You kind of finish your product. You have a pretty good, credible go-to-market strategy. We would do A. A is you have 6 to 18 months of metrics. In Pakistan, that could be a $5 to $10 million investment. We would do B. B is like you're really growing fast. You may be burning quite a bit of money, but there is a path at scale to become break even, and that's $20 to $50 million or more type of investments. So in other words, we would do seed. We would do like seed through C.
So,
but we're just getting started.
when that happens, so this happens so that it can all go on and get onto an IPO.
Yeah.
That's the goal.
The goal. So what's curious is like, people often say, okay, well, what's the exit in Pakistan, And that's what they would say in Indonesia too, in like 2013. Say, what's the exit? There's never been an IPO of a technology company in that country. Frankly, in India, there haven't even been that many historically. There's been a couple in the past couple of months or so, may have seen. But, I think the goal is to create a high growth, high-ish margin, durable business that can continue to grow enterprise value. Whatever that means. What does enterprise value mean? It's basically like, how much market share you are gaining, how much profit you can have in the further in your kind of steady state, how defensible your business is long run, which then, so for Amazon doesn't make a lot of profits.
Like monopolizing almost? Sort
of, yeah. Yeah, I think like Peter Thiel would say, I don't know if you read that book, but like Peter Thiel would say, like, he only would want to invest in monopolizing businesses.
Yeah.
You want to invest in number one businesses?
Yeah.
You want to create number one category businesses. The difference between a number one and a number two is huge, from an investor's perspective.
But it is huge though.
it's like the difference in perception of value and the ability to serve customers at a lower cost, reinvest in your product, reinvest in your customer acquisition, provide a better product at a lower cost over time.
Yeah.
That is what I think creates long-term enterprise value.
There's so much opportunity here.
Yeah, it's an open chessboard.
Yeah.
It's like if you made a matrix of like, what all of the categories are. I've used this term before, like the iron triangle, to talk about e-commerce payments, e-commerce, fintech, and logistics, right? Those are big. Those are three very big. Those are huge portions of GDP. But fortunate for you, nowadays, there are other huge portions of GDP at stake with digitization, real estate, healthcare, education. I don't know what I'm missing. But that and agriculture here, agriculture is 40%, right? 40% of GDP is agriculture. So I think there's so much opportunity on this chessboard to leverage software, but also like operational expertise, finance acumen, marketing talents to create very large and defensible businesses. That does require capital. It also requires human capital. But yeah, there's like these very, very large industries up for grabs.
So are you interested in like a certain space, or is just like any space would work at this point? There's like a lot of companies are really interested in fintech at the moment. So is that like, are you more fintech?
I think there's a lot of opportunity in fintech. But I'm interested in a lot of different spaces, but I think there's a lot of opportunity in fintech. But is like mortgages, is that fintech or is that real estate?
I'd say a mix of.
A mix of both.
Yeah.
Is buy now, pay later e-commerce or fintech? It's a little bit of both, right? Because you got to embed with the e-tailers as well, for the most part. If you're doing, there's these places like bleed into one another. I'm just a generalist. I think like
buy now, pay later. How would that work here?
it's just credit.
Would it be taken out your paycheck, or like how
It would be.
How would you secure that?
A lot of it's unsecured lending based on like credit profiles that you create in these customers, or the retailer can offer it, and then the retailer can offer credit to their customers, and you're just providing that like the option at point of sale checkout.
What if the customer doesn't pay?
I think then that's an issue.
But then can you offer an insurance
That's
to
the
cover
risk
that?
wall then.
A startup could provide the retailer with insurance to cover the chance that this customer doesn't pay.
Does that exist? Because it wouldn't make sense to me.
I've seen that before. Yeah, I've seen that for I've seen that for returns. I don't know if I've seen that for buy now, pay later.
Okay.
I think the liability is on the BNPL provider, not
Yeah.
the e-commerce.
Yeah. So but for them, in a way, a BNPL, which is just effectively a fancy way of saying like we're a credit card company or credit company, they're embedding that default risk into the pricing of the product already. So it's like somewhat of an embedded insurance product, I think.
Yeah.
In Pakistan, I think it will take some time to get mature because local retailers usually do it. The person they know, they give the credit system, okay, you can pay later and all that. Now, this is the new layer that comes between retailers and consumers.
Yeah.
So it will take some time. Credit, there is no credit history mechanism at the moment,
Yeah.
but definitely it will get mature.
Consumer credit is just like so.
It's the relation that they build.
Yeah. It was an article today that I was reading. I mean, I've heard this twice already in the past couple months, but the banks, 65% of their, or 60% of their lending is to the government. Wow. Another 20 or 25% is to, or 20% is like corporates with government relationships. And then like the remaining 20 is like, meaning like 10 is like corporates. And there's like 10 that's like consumer lending. But like generally it's really hard to get credit. Even like, honestly, like there's some like really talented entrepreneurs that I've met even in these last couple of even through like coming to Pakistan, we were like, yeah, I can't even get a credit card. Like you went to like a great university and like you like.
Debit card, a credit card is still far away. That's why they have to.
Fair, secured credit.
There
So
are
yeah.
other ways of paying because they don't, even in Turkey, I realize there's a lot of people don't have debit cards.
Yeah.
So how do you then do pay now, or take, what was it?
Buy now, pay later.
How would that work? I can't get my head around it, and if I could, it would be so fantastic.
Basically,
It's all an option.
there
It's all an
is
option.
two models which exist today in Pakistan. One is Akhuvat. So Akhuvat is a small loan lending kind of a bank.
Yeah.
So which don't require the credit history or collateral to give you the credit.
Yeah.
The second model which Kareem started.
Yeah.
So that was I was involved in that project. I previously worked in Kareem.
Cool.
So what happened was there is a driver. Driver don't have any collateral.
Yep.
They don't have any credit history. They don't even have the bank account. But Kareem wanted to extend a credit to them through a bank so that they can finance their vehicle. So what happened
Yep.
was on the basis of the business they were doing, right? Kareem provided the business model that they will be able to pay their installment, right?
Yep.
Bank came in and bank provided the loan.
Yep.
Then Kareem partnered with the manufacturer.
Yep.
That manufacturer gave the vehicle on a discounted price.
Yep.
Then Kareem partnered with the government entity that was called PMYBL, Prime Minister Youth Business Loan at that time. That gave the discount on the Kaiword Plus interest. Right?
Yeah. Yeah.
So that's how this function worked, and it's 100% credit
Secured.
back. Yeah, and
Yeah.
there's no bad debt. So this is how.
That's secured credit
Yeah.
based on the car
Yeah.
and the future earnings of the driver.
Future earnings of the bank. Yeah.
Yeah.
So this is how one of the B2B retail side player is already experimenting this.
Yeah.
Buy now, pay later.
Yeah.
So they are working on the same lines, right?
Yeah.
So I think what the Akhuvat chapter is very important in understanding the pay now, buy later thing. They have 99.5% credit back, right? So only 0.5% default.
How do you spell that?
AKHWAT.
Okay.
So they are the people, right? So who are already doing this.
Yeah.
So I think it's pretty doable. We just need to trust on the ecosystem.
Yeah. So I think consumer lending, another interesting model that I did as a more personal investment was that company Abi. Do you guys know this one? Yeah, I thought so many years ago, there was a Pakistani gentleman named Safwan Shah, and this was when I first started at SoftBank, and he was in San Jose, and he had sold a casino fintech business. Right? And he ended up starting a company called PayActive in Silicon Valley. And they started pioneering this model really for farms and and agriculture, wherein the workers would be able to access their wages in real time. So the thought was, and I actually worked on his first investor presentation, this was right out of Goldman. I was in my presentation phase. And it was okay, you can order a car on demand. You can order food on demand, but you can't get your wages on demand, even though you've earned them, right? You can't. And so what was really interesting is to see he pioneered this business model over the last 10 years. And there's a book that he wrote called Just in Time that was on this. It came out late last year. Abi is that. It's earned wage access, and it's a form of lending because it is to get your wages, which is it's a secured form of lending because you're basically advancing wages for a fee. And that fee sometimes, I'll be honest, is actually it's high. It can be pretty high. But it's a form of lending, right? Also consumer lending. And I think what also is at stake here in Pakistan is a payroll system, not unlike what you have in Gusto in the US, employee benefits, payroll, HR management, things of that sort. It doesn't have to be Abi, it could be any others. could be Gusto, and also data on employment and salaries that can be used then for consumer underwriting. But that digitization kind of is happening, right?